The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. I'm going to start out the show here with the gold and silver because those are the ones that are in the deepest trouble right now from my perspective of looking at this anyway. I'm not sure if it's going to continue to do that, but that's what it looks like anyway from cheap seats. Anyway, silver has broken below $16 significantly per ounce. That's not a very good thing. It's also weakening badly to the price of gold, which is also not a good thing. And the second chart that I want to bring up here is the gold chart that will show you the relationship here between the gold and the silver a little better. We've had this trend line that's been in effect since way back in November. It's held up several times here, but we're getting ready to break below it here. If we get below 1160 in gold, the low today was 1168. The thing that you need to look at from a cycle standpoint, if you'll notice these two cycles that are there, they're 86-day cycles, but you'll notice how on the first cycle, the market crested on the little bit to the right of the top of the cycle. That's known as high translation. And if you'll notice on the second cycle that it did almost the same thing, but it was closer to the middle, that would be also right translation. But what's causing this now is that you've got a cycle coming down here around the 15th to 18th of July that's pointing down, and there's some big ABCD structures that could easily, move this down to new low ground on the year, which would confirm the bear market that we've been in. This market had a chance to do something, back in March. It really did. We got down to that 1140 one more time, had a chance to run, but all it could do was make a 61% retracement, just shy of that up at the 1232 level. And again, last week on Thursday, we got up to the 61% retracement of that high exactly at 1204, and now we're down $34, from that level. So it doesn't look like it wants to hold. We're at the 786 of that range, down here at 1168. But frankly, with the white and long bars we've had these last few days, I really don't see gold holding up here. And I'm bullish gold and silver long term. I mean, I always buy silver, and I always buy gold. But from a charting perspective and from a speculation perspective, you really can't get involved with it as near from that point of view, as near as I can tell. Now, I wanted to do something this morning a little different here. I wanted to talk a little bit about the social networking stocks. And primarily because Facebook has now exceeded the value of Walmart, which I guess isn't hard to do since Walmart's going down the tubes all the time for a whole lot of reasons, I guess. But we'll take a look at Facebook first. You'll see it, from the last 4 or 5 months, we're making a 3 drive to a top pattern. This is a perfectly symmetrical one. In other words, from the high in December to the high in March is perfectly equal to the high in March to the high where we are coming in now into June. That number comes in right around 88.50 to 89. That would be the exact number on Facebook. Now, whether it stops there or not, we don't know. But that is a perfectly symmetrical 3 drive to a bottom pattern. What's amazing to me, folks, is the fact that Facebook has surpassed a company that's been around, I can remember when I was a kid, about Sam Walton back in Arkansas, and it's really amazing that they've surpassed them. That's one of the larger stocks in the country, and Facebook in 4 years has just gone, basically ballistic. I am not a social networking person. I am I never have been, and guess what? I am never going to be. So, you know, people that ask me all the time to join their programs and stuff, and I just don't do that stuff. I believe the less the government knows about you, and believe me, if you don't think the government follows that stuff, you're being very, very naive, in my opinion. So the next one we want to take a look at here is LinkedIn. That's another one that has been a darling. It's had some problems recently. Has these huge gaps that we had in January when they had wonderful news, and then a few months later in April they had really bad news, and then the market gapped down again. So it's really not a good tradable stock, but it follows the patterns nicely. As you can see on LinkedIn, that it made a really nice three drives to a top pattern during that time from July through December. It measured up to 277, and it got to 270. What did it get to? 276. So it's pretty close. And now we've just been in a corrective mode here over the past since May 9th or 10th. So it's not really done too much. Now, if we take a look at the next one, which is Twitzel. No, wait, was it Twitter? Twitter. Just a second. I've got that in here. Get these names mixed up a little bit. This one's under a little bit more pressure. They got some problems there with their CEO. I heard on the news anyway that they weren't happy about what he was doing. Whether that means anything or not, I don't know. But you'll see here in Twitter, this is really, and I kept a chart on Twitter, and the reason why I did this is because of the comment that came out by one of the big one of the big mutual fund companies put on a very, very large position in Twitter at $72 a share, saying this was a long-term position for them, and they put it on at 72. Now it's half that price. And that's the difference in investing. The difference between an investment and a speculator is investor is a excuse me, let's do it the right way. An investor is a speculator who refused to use a stop. So that's what they're in there. This probably will work out for them. You know, we're right near a relatively major bottom here, I think, in Twitter, at least from a short-term perspective. We're near an ABCD pattern, and we're also not too far away from some cycle lows that should be coming in mid-July. It's a much weaker than market stock, so I couldn't touch it. But those are the kinds of things. Now, Facebook will probably, end up the same way, but I'm not sure, when or if that'll happen. But that's just the way that it looks like to me. I had a question about wheat. We were listening to John Logan's really interesting program, and I wanted to bring up the wheat chart to let you see what's happening in wheat. There's two wheat charts that we really need to look at, folks. The first one I'm going to put up here is the one that we put in several weeks ago, looking for moves in wheat, and we've had a pretty big run here in wheat. We were looking for these. You'll notice when you watch the Tiger TV, you'll see these black lines that are there. They're nothing more than lines that I've cloned to show the ABCD patterns that tell us that we have a really strong probability of getting up into that 550 area in wheat. And this is at the same time when, we're having some weather problems, across the grid with everything else. But now I want to bring in the little shorter term pattern here so that we can see it a little bit better, and you'll see where we are, because we are setting right now as of the just a second here. I got to draw this in so you can see it. You'll be able to see this is September wheat, by the way. I don't do July because that's coming into delivery pretty soon. I don't want anything to do with that stuff. Not because it's difficult, it's that they just charge you a whole bunch of fees, and I don't care about paying for fees. So this is, you'll see that yesterday we stopped at the 786 in the wheat, exactly at the 529 level. We backed off a few cents down to 522. We're trading around 523 right now. But we had a really nice trade yesterday in wheat during the show. I sold it at 517.5, and it dropped 7 cents, and that was my first profit objective. And I took a profits in my first unit, and I put my break-even stop on my second unit, only to be surprised about 20 minutes later that the market just screamed on up to the 786 level. So it worked out okay, but I certainly didn't take advantage of that last move to the upside. But we should be in some corrective stage here in the wheat, and that's also in the beans. And I'm watching beans very, very carefully because I have a tremendous interest in those from a lot of different reasons. But we'll put the charts in here to review where we are and what we're doing and stuff, because we're having our first good correction in the last 8 days actually. And give me 1 second here. I'm going to start out with the daily, and then what I'll do is I'll move on to the shorter term to try to show you what I'm looking at as far as a retracement level in soybeans. Now, the high that we hit yesterday up around the 968 level, that was a 61% retracement of the rally from way back on March the 2nd. It was also a 50% rally from the high back on December 29th, and a 38% rally back from the high on November 3rd. Now, if we go down to a 15-minute chart on the grains, you're going to be you'll see it a little clearer, which is really what I want to show you. I want to put this in. Give me 1 second to draw in the ratios so we'll be able to see it, and then you'll be able to watch what I'm hopefully seeing in this. This would be an absolute beautiful setup should we get it, because it's down about another 14 cents, and that's what I'd like to see. And so we're going to put November beans here on the 15-minute chart over the last 2 weeks, well, it's the last 10 days, and you'll see we had the run up from the $9 level all the way up to $9.68, and now we're having our first serious correction. We corrected yesterday. We were down about 20 cents, and then we rallied back to the 61% retracement up at the 961 level, and now we backed off a little bit. Now, if this ABCD completes at the 382 level, that will come in around 940 a bushel. That's 15 cents lower than where we are right now. Folks, if this market is really good, it's not going to go much below that. If it gets below that, then there's probably a problem. So buying him at 940 with a 6 or 7 cent stop is the way to handle it, I would believe. And that's not a bad way to do it, because you're able to become a farmer for what, $300–400, and it's as opposed to putting up the capital and the heartache and the work, especially the work that's enables you to be a farmer. But anyway, we've got to watch these beans very closely here. At the 940 level. When I hear these prices, I can remember when I first started trading beans back in the 60s. They were trading at around $3.50 to $4 a bushel. Anytime they got to $5 or $6 a bushel, that was a huge bull market. And in 72, they got to $12.90 a bushel, and that was supposed to be never to be exceeded. And we went 1.618 beyond that on the last bull market at $19 a bushel. My mentor, Dave Nelson, he passed away back in 1977 when I was at Drexel. He was in Pasadena. He was a soybean farmer. He was a soybean trader, and he trained me in the soybean business. That's how I came back from losing all my money back in 1974. Was a big Gartley that I saw in bean oil that fit in with what he's. I'll finish this after our break here. We're going to have stocks opening here. They're probably going to open stronger like they usually do. Right now they're down a bit, but they'll come back. Just be patient.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I was talking about my good friend and mentor, Dave Nelson, who passed away back in 1977. Right after the big bull market that we'd had in '76 in beans, and he always had a comment that he kept on his desk. It says, "Don't ever go for broke. You just might succeed." And that's the whole key to this: is you try to keep your losses small and let your profits run. I enjoy listening to John Logan, and when I can, I listen to John Logan and also Basil. But these folks here at TFNN have a great deal of experience, and it's really a pleasure to be involved with it because they have so many smart people to help the folks doing the things that we're doing right now. Now, I know you're going to find this hard to believe, but there is a possibility that the banks have been in collusion on some of these things with foreign currency and now interbank loans, if you can believe that. Frankly, I find that hard to believe a bank would do that, but who only knows what's going on with some of these things that are really out there. We'll have to be able to wait and see. Now, thus far, we'll get to the markets here in just a second. I wanted to do the New York Stock Exchange Index one first because that's the one that holds the key to the whole puzzle here of what we're looking at. And we've come very, very close to the exact 786 in the Nasdaq, or the New York Stock Exchange Index. We were within about 4 points of it, which might have been exact. I don't know, because the number was 11,174. And we got to 11,167, so it was 7 points off. We could still make that today. But like I mentioned here, before. If we get above 11,212 in the New York Stock Exchange Index, then this whole bearish scenario that I'm looking at is just covered in cannon fodder, and it's just not going to work. But it's got all the things necessary for the market to really take a swoon dive, folks, with the margin debt the way it is, the credit that we have out in the world, starting with China that we've talked about many times, and also here in the United States with the corporate bonds and government bonds and all the other things that we're looking at. This is not a very good scenario. And not only that, when the stocks go up, we have declining, the advanced decline line still looks terrible. And fact is, I'll put that in here and let you folks take a look at it, because here again, with the big run that we had these last few days, the advanced decline line was still, you're just looking just really horrible. I'll put this up so we can take a quick look at it here. I get this stuff from Decision Point through John Murphy, and it does a pretty good job of picking out, what the stuff is looking at. But you can see we've had more declining issues than advancing issues ever since May 19th. And this is not a good sign. But this is a perfect Gartley that we have in the New York Stock Exchange Index. $64 question is it going to work? Because as we know, they're only probabilities. They're never certainties. And we'll most probably have to let the market decide what it really wants to do with that particular thing. The interesting thing in the news is the fact that they have decided, I guess, that the Greece thing is not the way they wanted it. Oh, what a big surprise. This thing is probably going to go back and forth for months, folks. I know from past experience that if someone owes you money, you are in big trouble, because if they can't pay you, they've become your partner. That's the bottom line. Unless you belong to the, the guys with the no necks, and they break arms and stuff like that. But the rest of the time, you're pretty much trapped into it to wait to see if they're going to pay you at all. Either that or they just default on it. And I'm not sure whether Greece is going to do that or not. I don't know if it means anything or not. I heard that it was less than 3% of the EU, the European Union, but I'm not even sure of that. But they sure make a lot of news. I think they get their value out of the news service for it. So we'll see what happens. But when I went to sleep last night, I thought it was a done deal. And when I woke up this morning, I saw that it was not a done deal. And stocks never really sold off very much. Dow was down about 60 points. It's come back from that. And so has the S&P, so has the NASDAQ, and even the DAX sold off about 100 points. And it's come back, quite a bit. So no one's really concerned or even worried about it. And therein lies the problem, because there's so much complacency out there. They can see by the VIX index that something really serious is going to happen, folks. I don't know when it's going to happen, but it's coming. Boy, I've been doing this a long time, and I look at these charts, and I say, why don't other people see what I'm seeing? And I'm saying to myself, maybe I'm the blind man in the smoke shop. I don't know. So we're going to take a little break here to pay a few bills for Mr. O'Brien, and then we'll be back right after these few words, and we want to cover some Treasury bonds and Treasury notes and a few stocks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to look at the chart of Goldman Sachs here. We've look at this at a weekly basis, of course, to get you a long-term view of where we are. You see we're still below the highs of 2007. It shows the big Gartley that we had several years ago back in 2011. And now you can see the weekly chart. We're making a very distinct 3-drive to a top pattern up here in this area of $215 a share. Whether that's going to be a correct pattern or not, I don't know, but that's what the pattern says, and we'll just see, let the markets decide. We've had a question about Hong Kong, and so I've put up the weekly chart of the Hang Seng Index, and as also you can see here, we have another 3-drive to a top pattern occurring at a 786 retracement. That occurred about 6 or 7 weeks ago, and we've been in a downtrend ever since. What's been interesting here is that when we've been rallying here the last 10 days here in the stock market in the United States, the Hang Seng has not rallied very much at all. It's just been barely able to hold its own above those lows of just 3 weeks ago or 2 weeks ago. So whether that's a sign of more weakness to come, you know, we have to wait and see. But that's what we're looking at on a long-term chart of the Hang Seng weekly. The weekly charts of all the country charts across the world don't look that good. I mean, most of them are in downtrends. We're one of the few that's in an uptrend. Now you look at the Shanghai index. that Tom O'Brien focused on yesterday, you know, that's had a tremendous move, but it's still only at the 78% retracement of where it was a few years ago, and it's having really wild swings over there every day now in China, in Shanghai, and you're going to see some really big moves. They've had a couple of 6% moves, so we'll at least do 1.618 of that, which we'll see a 10% move very, very quickly, either up or down, and that'll tell us that we're getting close to popping that bubble, but we'll wait and see. The Shanghai building over there, as I mentioned several times, is 93 stories, the Shanghai Stock Exchange building. It's brand new. We were one of the first people in it for a meeting, and that was in April 3 years ago, I believe. I lose track of time. It must have been 3 years ago, and it was really, you know, really pretty nice. So, but they're saying that their volume is far bigger in futures than what we have here in the United States, and I suppose that's possible, but I would highly question it because you know, the futures market over there is very, very new. I started, you know, going over there for the Merck in 1996, you know, giving lectures about capitalism and how the floors operated and stuff. I went to 12 major universities over a period of 6 years, you know, discussing stuff about what was going on. It was very interesting. I had a really wonderful time. I was treated like a rock star, which at my age, you don't have that happen very often, but it was a lot of fun. And they were certainly interested in speculation. One of the things that I always got a jolt out of, or a kick out of, was every time you would be in a Chinese hotel and you would be watching Chinese television, either CNN or BBC, whatever it was, in the lower right-hand corner, they would have a quote of the Dow Jones Industrial Average up to date. And on the left-hand side of the screen, on the insert, would be a quote of oil, crude oil, and also gold. So they were watching oil, crude oil, and the New York and the Dow Jones Industrial Average. So, and this was almost that's almost 20 years ago. So now it's highly sophisticated. They have huge trading complexes there, which is you know, really something to see. But their level of expertise in the markets is you know, way behind what we're doing technically, because they just don't have the educational stuff set up like they have. They don't have anything like TFNN in China. Hey, that's something you might think about, Tom. Anyway, that's it's really good to have something like this, because you can share ideas of what's going on in some of the things that you know, we're watching. Now, yesterday we had a situation, I believe we talked about it in the gas market, in gasoline. We came down right after the open. We stopped exactly at the 786 retracement of the last 2 weeks range in gasoline futures, down at $2 a gallon, and we rallied almost 10 cents a gallon in 1 day. That's a lot, folks. That's equivalent to over $3.50 a barrel in oil. And as you can see by the blue line, the oil also you know, increased quite a bit. Now, this market is in a broad consolidation with a bias to the downside, and the reason why I say that is that heating oil is not keeping up. Gasoline, which used to be the leader, is now the lagger. So that's another thing that makes you wonder that this thing is not working the way that it should. So keep that in mind as you're looking at some of these things, that bias is to the downside in the oil complex, at least from the way I see it. I don't think we're going to take out that 62.80 a barrel in crude oil. We're trading at around 60 and change right now, so I don't think it means very much from a breakout standpoint, with the others lagging finally after that last bit here. Okay, so we're going to take a look here at what we got going. We probably got stocks rallying again. Of course they do. They're rallying just like they always do. And they're almost back to unchanged on the day, which is good. And so we'll see now if we have a situation where we're going to continue on today or not. A lot of this stuff is, I guess, related to whatever comes out of Athens or Brussels or wherever they happen to be. And, it's just it's no different than the Fed. They're doing the same thing. Folks, what this is a look at me over here, look at me over here. Don't look at my right hand, what I'm doing over here. Look at my left hand, because the right hand is the right hand is the big problem. And here's the right hand. I'm going to show it to you two ways. I'm going to show it to you by the United States way, and by the stock market stuff. And this is the margin debt that's out there. It's 50% higher than it was in 2007. It's higher than it was in 2009. You see how both of those ended. And then the other one is, I want to show you the Chinese debt situation. It's just about as bad as ours. Of course, our quantitative easing is, we don't really know how bad our quantitative easing is, but from 2000 in government debt and for the credit boom in China, now they're at 28 trillion. It's up 10 times from what it was. It was 2 trillion back in 2000, and now it's 28 trillion in 2014. That was last year, and it's also increased again this year. So this is the real problem, is in the debt market. That's where the real problem lies, and we'll see what the effects will be, longer term. But right now, no one's really concerned about anything. Stocks, the S&P really has no volatility at all, folks. It moves 5-10 points. I mean, that's nothing. The DAX, it moves 10 times that in just a matter of a few minutes. So it's really quite amazing how this stuff really unfolds. But neither here nor there. I had a question about the gold and silver. Folks, I've posted the gold and silver charts into Tiger TV here. They might bottom right here, but I frankly don't see it. It would be a surprise to me. They broke below major support. I have to respect that, and I really like being long silver and gold. I especially believe everybody should own some silver coins, the $1 rounds, or the silver eagles as they're called. But the chart itself, doesn't look good. But that, I'm talking about holding them and never selling them. I mean, maybe use them, but don't ever sell them. And I never have, so we'll see how it transpires, but it's been good to me over the years, so we'll have to wait and see. That's Gresham's law, where bad money drives out good, and the good money is the silver and the bad money is the paper, and that's what's happening right now. And so you want to pay attention. It's better to be buying silver when it's cheap than when it's very expensive. That's my feeling on what we're looking at here. So sort of keep an eye on what we're watching at that point. See, I had one other question. Oh, Apple Computer is strong, I guess, today. Someone brought this to our attention this morning. I imagine it's getting ready to break out above 900 or whatever it's going to be. It's up at 28, so it's taken out the previous day's high. We really haven't done very much in Apple here. Over the last few days, we've gone from 26 to 28 when the rest of the market has been pretty strong. I still believe that we're heading towards the 121 level before we have any significant move to the long side. But we'll have to wait and see what's going to hold on to these things right now. But it looks like with this ABC structure that we have here in Apple, that we are heading down, and that's not very much. You're only talking about 128 to 121. That's pretty much what we're looking at. The problem in the market, folks, is there's just no volume, and not only that, but there's no fear. I mean, there is no fear out there. I mean, I can understand a little bit of fear, but there's no fear. I mean, you look to see what some of these folks are doing, and it's there is just, I mean, you got the VIX index getting ready to make another new low. Boy, I mean, this is very unusual, but the market's not going down yet. I mean, but still it's not going down. But this is where we are. Let me put this cycle here in the because that's probably based on the same one. That's not going to be due until it looks like it's tomorrow in the VIX index. Let's just put that up here. But look at it, it's right gap down again, and there's no reason for anybody to be fear, even with the Greek thing being that they said that there's no deal, the market is still strong. So the Greek deal has nothing to do with the market. I think that proves it to itself that that's really what the case is. The market's going to do what it's going to do. It's a normal cycle. It's supposed to be doing what it's doing, and that's the bottom line. Now we will have. I want to look here at this VIX a little bit because it just came to my attention here that we have a very interesting pattern here. Give me 1 second. And I will draw this in because we have a really nice 3 drive to a bottom pattern forming here And this is one of my favorite patterns, and that's coming not too far away. Well, if it gets down to about 11, it will complete. Let's just take a look at this and watch it, because this will be one that we really want to be looking at. So we'll see what happens. But there will be a perfect 3 drive to a bottom pattern. If we get the VIX down to around 1130, that would be 11.30. We're trading at 12.57 now. And we're just opening, so you're not getting much of an indication yet. But it looks like it's going to open about unchanged from what it looks like on this chart. There we opened at 1261, so we opened a little bit higher. But this is a 3 drive to a bottom pattern that is forming. We did not take out the lows of the other day at 1182. We got to 1193 yesterday, so that might have been a little disappointing to the bulls, but that's neither here nor there. But this is longer term. This is a very bullish pattern, i.e. bearish stocks, as near as I can tell. But you look at it all together, boy, oh boy, it's really tough to try to be a buyer of these things. Looking at what we're looking at right now, it's tremendously bearish from any, and that's what scares the hell out of me, is I'm the only one that sees it. So I got a couple of my friends, but they're as nuts as I am. But what are you going to do? So we'll see what happens. The DAX yesterday went right up to that number we were looking at 11,618. I think I'll put that in here because that's something that we should show when we we'll see what happened to it yesterday. Give me 1 second here. I've got to get the right chart, and then I'll be okay. And we'll put this in here so everybody can see it, and we will I borrowed this chart from my friend Andy Fink in Berlin. We do the same work. He's just very good with these graphics. He's very good with everything, but he does a lot of good with graphics. But we went right up to that level at 11,641. That was within 1 penny of 1 point of the exact number from way back in March, and we've now broken down to 11,300 and change, and we rallied back to 11,500 just recently. But that's what it looks like right now, as we've completed that top in here. Any move above 11,660 would tell us that this thing is going to go a whole lot higher, and you don't want to be involved with it. That's that same number that we're looking at in the New York Stock Exchange Index, and that is at 11,212. If we hit that, then there's a really serious problem somewhere in my analysis, and that wouldn't be the first time that that's ever happened. But we want to respect that quite a bit. We haven't got any opening indications yet. Sure we have now. Hold on just a second. So we opened down just a little bit on the New York Stock Exchange Index so far today. Nothing very significant to make a play for or anything like that. The euro has made some type of major top up there at 114. You'd think that the fact that they had this Greek deal would go through, but then there's no Greek deal, and we still have the euro down. So maybe the currency folks saw that coming, but the other folks didn't. The pound is under some pressure. We had a 382 retracement in the British pound this morning, up at that 158 level, and then we sold off about 60 pips. From that level, and that's the bottom line of what I'm looking at. So we'll take a little break here. We'll come back and finish up the show.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Well, we're back, folks, and I have just received probably the greatest news of the day, and that is that Basil Chapman will be on next. So I'll be able to listen to the young fellow. He sure tells me a lot. He's a great mentor, and he's a nice person, a great human being, as old Louis Rukeyser used to say. Okay, we're going to take a look at a couple of these markets that are just going, off the charts. The first one we're going to look at is the Russell futures for the small cap 2000. That thing has made new highs, making new highs again today. We're not quite doing that in the IWM yet, but we'll have to wait and see, what's going to happen. But we have another one that is just going crazy. It's not going crazy today, but that's the IBB, the International Brotherhood of Bankers, also known as the Biotech Index. These folks are the ones that bring us the $500 prescriptions that you see people get as they get older. They have to be paid in full, and boy, believe me, some of these drugs are so expensive. It's just, fortunately, I'm not involved with them, but boy, when I'm in the pharmacy picking up my usual stuff, I watch the bills that are tagged on there, and boy, oh boy, when you see 4 digits on a cash register, wow, it's a little bit of a they don't have cash registers, they have computers anymore, but it's really quite amazing. But the IBB has some resistance up here at the $400 level. We're trading at 380.86. You know, that's really not much going on at that point. We'll have to wait and see. The stocks right now, looks like we're about unchanged on the day, just about across the board, maybe down slightly. So not too much is happening with there. We got gold and silver still under some pressure, and I don't think that market's going to turn around. If it turns around, we'll be on it, but right now it certainly doesn't look like it. And it looks like this deflationary thing that people are talking about, could be coming in, because we've got bonds are under pressure. Today they're up a little bit, but commodity prices are dropping, with the exception of the rallies that we've had in grain, and corn is still historically very, very weak, as is wheat, and as are beans. Beans are relatively weak from where they were 3 or 4 years ago, and copper is certainly weak. Zinc, aluminum, steel, all of them are. So that's what I'm seeing, folks. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.